if you take a look at the total value of all the money in the world, all the value of stocks, bonds, real estate, gold, oil, commodities, artwork, cash, add it all up, all the money in the world, it's about $800 trillion. If everybody who owns all that stuff, you, me, everybody, if we allocate just 1% of our portfolio to crypto, that's $8 trillion. $8 trillion added into Bitcoin turns Bitcoin into 500,000 per coin. It's as simple as that. It's just basic arithmetic. And that's a 1% allocation. If you think people will allocate 10%, now you're talking about 5 million per Bitcoin. And that's how Michael Saylor gets there. Michael thinks that we're going to get 10% allocations by institutional investors, governments, sovereign wealth funds, etc. And if he's right, Bitcoin will be 5 million, not just 500,000.
If you had to choose one form of money to survive the next 2 centuries, through economic resets, wars, political shifts, and rapid technological evolution, what would it be? The answer, according to Elon Musk's XAI chatbot Grok, is Bitcoin. In response to the simple yet profound question, what is the most likely money to be used in 200 years? Grok answered, Bitcoin. Not the dollar, not the yuan, not even gold. Bitcoin. Its decentralized nature, unchangeable supply, and built-in resistance to both human error and institutional manipulation give it staying power that no fiat system can match. And now, that long-term vision is colliding with political reality in ways we've never seen before. Last Friday, President Donald Trump signed into law the Genius Act, a comprehensive regulatory framework for stablecoins that finally gives digital assets a clear path in the United States. It marks the first major piece of federal crypto legislation, backed by both parties, celebrated by TradFi and DeFi alike, and hailed by crypto pioneers as a milestone event. For the first time, stablecoins, digital dollars built for speed, security, and global accessibility, have been officially embraced by Washington. This shift is not just symbolic. It signals the United States is moving from resistance to leadership in digital finance, and it opens the floodgates for Wall Street, fintech giants, and even global retailers to fully enter the arena. As Ric Edelman says, when was the last time you saw an entire industry beg to be regulated? Against this backdrop, Edelman, the founder of Digital Assets Council of Financial Professionals, is making one of the most important financial calls of our time, a $500,000 Bitcoin price target, based not on hype, but on simple arithmetic. If just 1% of the world's $800 trillion in wealth finds its way into Bitcoin, we get to $500,000 per coin. And if the allocation rises to 10%, the number jumps to $5 million, a figure that no longer seems outrageous in an era of institutional FOMO, regulatory green lights, and exploding on-chain adoption. From stablecoins to ETFs, from Ethereum's surge to the coming wave of tokenization, this is a moment of convergence, where technology, money, and policy are finally lining up in Bitcoin's favor. In this video, you'll hear directly from Ric Edelman on why he believes Bitcoin is still wildly undervalued, how stablecoins are becoming the backbone of a new global financial system, and why Ethereum and tokenized assets could be the biggest winners in the next chapter of this digital revolution. Stick around as we unpack the numbers, explore the trends, and highlight the opportunities that could define the next decade of investing. If you're serious about understanding where the world is heading, hit that like button, subscribe to the channel, and let's dive in. Thanks, and enjoy the video.
Well, it's really great news. We've been long expecting this. Donald Trump made it very clear when he was running for president last summer that he was going to be very supportive of crypto generally, Bitcoin specifically, and he has been true to his word in his administration. The Genius Act, which provides the rules of the road for stablecoins, was the low-hanging fruit of crypto. Everybody is in agreement that we needed these rules in place. Majorities from both parties in Congress, the administration as well, the crypto community, TradFi, everybody knew this was a big deal because, as is always the case with technological innovation, the innovation comes first, the regulation comes second. You know, think back to automobiles. First we had cars. The very next thing we had were car accidents. So That's what led to stoplights and rules that you drive on one side of the road, not the other, and so on. That's where we are with stablecoins. Already, stablecoins hold 10% of all the US currency in circulation. And the Treasury Secretary says that over the next 2 years, we're going to see trillions of dollars more added into stablecoins. And yet all of this was happening without any federal guidelines, rules, regulations, legislation, meaning there was a big need for consumer protection. That's what the Genius Act does, and everybody is thrilled about it. The best way I can phrase this for you, Jen, is to note this. When's the last time you saw any industry begging to be regulated? That's where the crypto industry is. Instead of demanding that the government get off our back and leave us alone, which is what you find in virtually every other industry, the crypto community recognizes that if we're going to become truly mainstream, if we're going to truly be effective for the vast majority of investors and consumers and businesses, we need rules of the road that everybody can agree to operate under. Set the speed limit whatever you want. We just need to know what it is so we don't get a speeding ticket without knowing we're driving too fast. And so the Stablecoin Act, the Genius Act, is the first major step in that direction. And there are two other bills that are coming right on its heels that will also demonstrate the opportunity for the financial services industry to get engaged in a way they never have before in crypto's 16-year history. It's a milestone event, super exciting.
Talk to me about how investors should be looking at this. I mean, should we be looking at the stablecoin news and then looking at companies like Circle, who just went public, looking at how to allocate part of the portfolio to companies like Circle? Should we be looking at holding stablecoins? What's the next step?
Yeah, there are two elements to this conversation. One is you as a consumer, what are your behaviors for managing your money? And then there's the investment conversation. What should you be doing to make a profit out of this? So we need to talk about them one at a time. First, the consumer level. Stable coins, as you noted, were predominantly used for people that, for example, they owned Bitcoin and they sold it, and they were thinking of buying a different coin, but until they figured out what to buy, they had to put their money somewhere. And instead of taking their Bitcoin and sending it back to their bank, which is a pain in the butt, takes days, costs fees, really a nuisance, stablecoins let you keep the money in your accounts, say at Coinbase or Kraken or Gemini or wherever, making it simple, easy, convenient, and free. That's growing. We are now going to see banks offering their own stablecoins. A consortium of Citigroup and Bank of America and Wells Fargo are all getting together to create their own stablecoin. Amazon and Walmart have announced that they're going to develop their own stablecoin. They're going to make it easier for you to shop. They're going to make it cheaper for you to shop. You won't have to use their credit cards. They're going to offer you discounts. They're going to allow you to avoid those 3% credit card fees. They're going to offer you loyalty rewards points. So as a consumer, these stablecoins are going to be a great way for you to do what you do anyway, but faster, cheaper, safer. And if you live outside the United States, they're a massive benefit. Instead of you having, if you're a resident of Venezuela or Zimbabwe or some other country where you either have an unstable economy or a corrupt government, now you can take your money and put it into a stable coin, which is backed dollar for dollar by the U.S. Treasury or U.S. dollars, so that you can trade your Zimbabwe dollar, which is worthless, for a U.S. dollar, which is the strongest, safest currency on the planet. This is going to open up financial security, safety, and access to the financial markets for billions of people around the world. Super exciting for consumers worldwide. But now for the investor, how do we benefit from this? Because after all, buying a stable coin is not an investment. The whole point is that the price never changes. So how do you profit from this? You said it, Jen. Buy the stock of the company that is running those stable coins. So Circle did its IPO, one of the most successful IPOs in history, because people are recognizing the incredible profits that Circle earns by operating its USDC stablecoin. Tether, this is shocking to people. Last year, Tether earned $13 billion. That's more profit than BlackRock or Ford or GE or McDonald's. This is an incredibly profitable company because of the way they operate in providing these stable coins for consumers. So yeah, adding to your diversified crypto portfolio companies that are creating and operating or deploying stablecoins is a great way to add to your crypto diversification.
What were you watching over the weekend, and what are you looking forward to over the next week?
Yeah, ETH is the big story, of course, because it has been in the doldrums for quite a while. It fell 50% in value and had stayed down for a long time. As Bitcoin recovered and grew with Donald Trump's election and the changes in the new administration, ETH languished. It didn't enjoy the party as much. And I didn't quite get it. It was frustrating to me because I've been a longtime fan of Ethereum. I invested in it when it first came out in 2015, and I still own it today. And I've never really understood the story, especially because everybody's excited about stablecoins. Well, if you're excited about stablecoins and you think there's going to be trillions of dollars flowing into them, how do stablecoins operate? Mostly on the Ethereum blockchain. So if you're bullish about stablecoins, you are by definition saying that you're bullish about Ethereum. And I think the marketplace has recently begun to wake up to that fact, which is why we've seen Ethereum skyrocket in value in just the last month or so. And I think this trend is going to continue. Just as the stablecoin story is going to racket up, I think that the Ethereum story will as well.
As Ric Edelman points out, Ethereum's recent price action could be more than just a technical bounce. It might be the opening signal of a full-blown altcoin season. Historically, when Ethereum begins to outperform Bitcoin, it tends to usher in a powerful rotation into other Layer 1s, infrastructure tokens, and high beta plays. And right now, that rotation appears to be gaining momentum. Look at the charts. Hype, the breakout star of the AI token narrative, soared to a new all-time high on July 14th, grabbing headlines and spotlighting renewed risk appetite across the market. Just days later, XRP, long considered a sleeping giant due to its legal entanglements, shocked the crypto world by punching through resistance and reaching a fresh all-time high on July 18th. And now, in what may be the clearest sign that large-cap altcoins are back in play, Binance Coin, BNB, the native token of the world's largest crypto exchange, printed a brand new all-time high on July 23rd. Even earlier in the year, we saw hints of this coming alt season. Sui, one of the most promising next-gen Layer 1s, surged to new highs in January, showcasing investor excitement for novel scalability solutions. And Solana, often hailed as the Apple of crypto for its speed and user experience, also hit a new all-time high that same month, solidifying its return from the ashes of 2022. Across the board, capital is rotating into altcoins with strong narratives, solid tokenomics, and real ecosystem momentum. But what's even more bullish is that all of this is happening before the broader wave of institutional capital truly hits the space. Which brings us right back to Ric Edelman's thesis. If the total global asset base reallocates even 1% toward crypto, Bitcoin alone climbs to $500,000, and that's without even factoring in a rising tide lifting altcoins. Edelman believes we're heading toward a world where not just individuals, but institutions, pension funds, and even sovereign wealth funds begin to treat Bitcoin as a core strategic asset. Push that allocation to 10%, and we're staring down the barrel of $5 million per Bitcoin. It's not just possible, it's plausible, and it could happen faster than anyone expects.
Yeah, my book, The Truth About Crypto, Over My Shoulder, debuted in 2021 at #1 on Amazon. And in that book, I said that you should, most mere mortals, allocate 1% to Bitcoin. And the reason that I said that is that back in 2021, even though Bitcoin was at that point 10 years old, we didn't know what its future was. Would the government ban it? The Biden administration was strongly opposed. The Obama administration had done nothing about it. Even Trump in 2017 was opposed to Bitcoin. So we didn't know if it had a future. Would the government ban it? Would consumers reject it? Would investors get bored with it? Might there be some other technological innovation that would upend it? It was a highly aggressive, speculative bet. And my attitude was the outperformance potential was there, but so were the risks. So a 1% allocation was enough to give you the benefit of outperformance if it happened. But if it went bad and it blew up and became worthless, so what? A 1% loss of your portfolio wouldn't harm you financially in terms of your future financial security. That was 2021. You fast forward now to 2025, just 4 years later. And what do we discover? We have an administration that is completely supportive of crypto. Every member of the president's cabinet personally owns Bitcoin. Every economic appointee, the secretaries of Treasury, Commerce, Labor, the CFTC, the SEC, the OCC, the FDIC, all are strong supporters of crypto. We now have majorities of both parties in both the House and the Senate, strong supporters of crypto. And this is why we've seen the 3 bills going their way through Congress in the House this past week. So the question, is Bitcoin going to get banned? Absolutely not. We also, by extension of this new paradigm in Washington, we now have the opportunity for TradFi. We're seeing for the first time ever, banks and brokerage firms are allowed to trade and custody crypto. They've never been able to do that before. So it's a massive change that you're going to see by Wall Street engaging in this asset class in a brand new way. We saw the first inklings of this 18 months ago with the launch of the Bitcoin ETFs, now $100 billion invested in those things, the most successful ETF launch in history. And on top of all of that, it's getting the attention of the institutional investors. Endowments, pension funds, family offices, sovereign wealth funds, and on and on and on. This is why the amount of inflows into Bitcoin and other digital assets is only just now beginning. I'm anticipating we're going to see trillions of dollars flowing into this asset class over the next 4 years. It's going to put Bitcoin at $500,000 by the end of the decade, in my view. And this means right now it's very early, and the risk of Bitcoin today is not nearly as high as it was 4 or 5 years ago.
Talk to me about what needs to happen for us to get to $500,000 in the next 4 years.
Yeah, Jen, I've seen those predictions too from some other folks, and I've never seen their explanation of why. So let me share with you why I argue for a $500,000 Bitcoin. If you take a look at the total value of all the money in the world, all the value of stocks, bonds, real estate, gold, oil, commodities, artwork, cash, add it all up, all the money in the world, it's about $800 trillion. If everybody who owns all that stuff, you, me, everybody, if we allocate just 1% of our portfolio to crypto, that's $8 trillion. $8 trillion added into Bitcoin turns Bitcoin into 500,000 per coin. It's as simple as that. It's just basic arithmetic. And that's a 1% allocation. If you think people will allocate 10%, now you're talking about 5 million per Bitcoin, and that's how Michael Saylor gets there. Michael thinks that we're going to get 10% allocations by institutional investors, governments, sovereign wealth funds, etc. And if he's right, Bitcoin will be 5 million, not just 500,000.
We're saying 10 to 40% allocated into crypto. Are you thinking mainly Bitcoin here, or are there other cryptos you're considering?
Well, the first thing to note is why 10 to 40. That's a really big range. I'm arguing if you're a conservative investor, 10%, moderate, 25%, and if you're an aggressive investor, 40%. And I'll leave it to you and your advisor to determine whether you're conservative, moderate, or aggressive. And then the second question, yours, is what does that mean? How do I invest? What do I buy? And I will leave that to you and your advisor as well. Some people, like Michael Saylor, who I love and adore, is a Bitcoin maximalist. Many argue you should just buy Bitcoin and nothing else. Others argue broader diversification, including Ethereum, Solana, Algorand, Polygon, the other major coins. Some also argue that you should do crypto equities, companies that are engaged heavily in the crypto space, such as Coinbase or now Circle, a public company today, or some of the other exchanges, Bitcoin miners, and so on. There's a huge infrastructure in the crypto community, building, developing blockchains, etc. And so building this out. It's up to you to do this. My point is doing nothing is the speculation. We need to recognize this is a legitimate asset class. It has gone mainstream. It's going to grow immeasurably from here. We're still in the very early stages. And whether you argue for Bitcoin only or a combination of a bunch of coins or adding in crypto stocks, we'll all argue and debate. But guess what? in 5 years, we will all laugh at the person who did none of the above.
Talk to me about the resurgence of the metaverse you expect to see and what that means, because I think metaverse means different things to different people.
Yeah, the metaverse used to get a lot of big deal. We all know that Facebook changed its name to Meta as a ploy to Metaverse. It's basically the digitization of everything, and it's all about tokenization, and the tokenization of what we call RWA, real world assets. We know that Bitcoin is a digital asset. It only exists on the internet, but there is a way that we can take a real asset, say an office building, create tokens that represent ownership of the building, the same way we create shares that represent ownership of a company. And these shares or tokens can represent the ownership of a building. And now we can tokenize them, trade them online, and do it in an online environment that lets you visit that building virtually in an online environment, similar to the way you would play a video game. Why would anybody do this? Well, I don't know. Nike last year made about $100 million selling digital pairs of sneakers. So we have Burberry making tens of millions of dollars selling clothing that only exists in the metaverse. Gamers use it to dress up their avatars. So this is something that people really enjoy doing. It allows them to become owners of their activity. If I've got an avatar in Fortnite, I can dress up my avatar in clothing I buy from Burberry or Tiffany or Dolce & Gabbana. And when I'm tired of playing the game, I can take that clothing and sell it to another player, maybe even for more money than I paid for it, creating an ownership environment, not just merely a fandom or a player environment. This is something that is going to change everything, and it's all being fostered by two other technologies, AR and VR. Virtual reality and augmented reality. Meta is already selling Ray-Ban eyeglasses that use these technologies, and it's all about the combination of the real world with the digital world. And that's what the metaverse is all about. And that's why it's going to be a big deal over the next decade.
What we're witnessing right now isn't just another crypto rally. It's the early stages of a financial transformation that's gaining speed, clarity, and institutional legitimacy. With the Genius Act now signed into law by President Trump, the U.S. has planted its flag in the digital asset landscape. For the first time, there's a clear path for stablecoins to go mainstream, unlocking a $1 trillion opportunity for crypto integration across global commerce, banking, and payments. That alone is a paradigm shift. But when you combine it with a surging Ethereum, breakout altcoins like Hype, XRP, and BNB, and a macro backdrop primed for capital rotation, the signs couldn't be clearer. The next chapter of this bull market is unfolding right before us. Ric Edelman's $500,000 to $5 million Bitcoin prediction may sound extreme to the uninitiated, but the logic is simple. We're not talking about irrational exuberance. We're talking about arithmetic. Bitcoin's fixed supply, rising demand, and now growing regulatory clarity create the perfect storm for long-term appreciation. And remember, we're still early. Institutional allocations are just beginning. Tokenization is still in its infancy. Meanwhile, altcoins are waking up. Whether it's infrastructure plays like Sui and Solana, or ecosystem giants like BNB, the market is rewarding quality and narrative alignment. AI tokens, payment coins, and L1 challengers are reclaiming their momentum. And this time, the liquidity is deeper, the users are more sophisticated, and the on-chain activity is measurable. This isn't retail FOMO. It's strategic positioning ahead of what could be the largest capital inflow crypto has ever seen. And if you believe crypto's next leg higher is already underway, drop a comment below. What's your top altcoin pick for this cycle? If this video gave you insight, share it. If it inspired you, subscribe. Thanks for watching.